Alright guys, so what is the stock market? The stock market is the US financial backing system that allows regular people like me, you, but also financial institutions put their money into companies that they believe in to make them grow, help them with capital, help them with funding, and the hopes that these companies give them, pay them money back on either dividends or increase of the underlying price of the stock. Where an investor can buy or sell and then make profits, or keep the stock itself to earn dividends. So there's two sides, in my opinion, to the stock market, and we're going to talk about both sides. The first one is the stocks themselves, and so what is a stock? A stock is a contract that gives you one share of a company. So a company overall has millions of shares, and so when you own one share, you own a small pie of the company. Most companies give shares to all their workers, to their executives, and then they offer shares to banks who do initially. So say the underlying price of the stock is $100. So you can make money two ways from owning a stock. One is with the dividend option, if your stock offers a dividend. So, and the other way you can make money of the stock is if the underlying price raises, say goes from 100 to 115, and you decide to sell your share for $15 profit. Those are the only two ways you can make money from a stock. With stocks, there is less risk associated with owning the share because it is hard for a company to go up or down, and it doesn't fluctuate as much. So stocks offer a lower level of risk than options do. I'll get into options in 1 second. But stocks are great vehicles if you are thinking long term, and for long term holds, you want to set up a drip account and a growth account. So a drip account, dividend reinvestment program. We'll just put that in the video.
Yeah, on the bottom.
Dividend reinvestment program. The purpose of a drip account is to have companies that give enough dividends for you to have every 3 months, which are when dividends are paid quarterly. You will get a good chunk of money for owning these stocks or having this drip account. The other one is a growth account, and in a growth account you will like companies that are doing very new things that will make them shoot up in price. So right now in 2020, we have seen that all the tech companies have not been affected by the coronavirus because they keep going up and up. Technology is being used. They're expanding, they're acquiring. Their underlying business model has not been affected. So in this era, it is great to invest on tech stocks because they provide a future. So they are going to grow at a faster rate than other stocks in other industries. So with stocks, you want to look at a lot of different indicators, such as how many shares have been bought during the day, what's the actual rate of change intraday, extraday, and we'll get into more of that in future videos, to what to look for, what to avoid when purchasing a stock, what indicators to look for when you want to sell a stock, how do you know that a company is going up or down. And there is multiple ways of trading. The most popular ones are technical analysis and fundamental analysis. So technical analysis basically is going on the charts and looking at all the indicators. So you go on the charts and you look at the daily chart, the minute chart, the weekly chart, and you graph all the indicators. You watch for the trend. You check the volatility. How is it behaving? What did it do in the past on certain dates? What are major dates coming up? With things such as announcements, new product developments, reports, whatever it is that can change the underlying price of the stock, and that's all combined with fundamental analysis. Fundamental analysis is looking at the news, looking at what people's talking about, what people are talking about the stock. About the company, what the company is doing, what have they gotten into. So for fundamental analysis, a lot of traders look at news, mostly headlines of trusted sources, Bloomberg, Twitter, Yahoo Finance, etc. There's many sources where you can look at news, but you mainly just check out what do you think the community is thinking about the company, and what new changes are coming up. That way you can be prepared for the reaction. You have to look at the reaction and how people are feeling, because fundamental analysis is based on feelings. How do you feel about a company? So an example would be Apple, for example. Everybody's super hyped about Apple. Everybody loves their products, the ecosystem, the way that everything connects with each other. So every time Apple releases a new product, people are expecting great things. And so the underlying price of the stock might go up. Now, if there was a negative connotation, for example, this year they did not announce an iPhone, a new iPhone, and so investors were really upset, and the underlying price of the stock went down. So it's all about the feelings, because really the numbers are not there to show anything different. It's just, what did the company say? What are people talking about the company? How do you think the company is going to perform based on the news that you're reading and on the things that you are seeing? Between these two, they go back hand in hand, because with technical analysis, you will see the effects of fundamental analysis. When you're looking at a chart, when you're looking at a trend, the way things go, sometimes this news, are really what drives the price of the stock. One other example, this year, 2020, company Lunkin Coffee, based in China, was booming and was giving everybody, all the stock traders, great financial reports, great numbers, saying that we're taking over the Starbucks, we're competing against Starbucks here in China, and we're gonna extrapolate it different places. So investors are like, whoa, raving about Lunkin Coffee, blah 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 blah. We came to figure out that the CEO of the company was lying the whole time about the reports that he was giving, and the numbers were completely inaccurate. The stock price went from a good $55 per share to a sweet $4 per share, with a decrease $4 per share, with a decrease of $51 in less than a week. Now the stock is off the market because of the allegations. It might come up later in the future once they resolve everything with the SEC here in the US, but the US is very against Chinese companies because of the very same reason. So technical analysis and fundamental analysis go hand in hand. Now my favorite is fundamental analysis, because I know that that determines a lot on the technical analysis. And I like to read news because I know how to understand people. I know what my friends like, I know what my friends think about something, and I can understand what different generations and different people are thinking about a stock. So based on the news, I can determine if it's going to be great or if it's going to affect the stock on a negative connotation way. Cut.